I've sort of had a variety of experiences growing companies, from the bootstrap, the very first one, and understanding the benefits and the drawbacks to that, even though we were profitable and eventually sold the company, to bringing in outside venture capital and the benefits there. And I think, it really depends on what the entrepreneur is trying to accomplish. If you're just trying to solve a particular problem, build a company that you want to control and run for a decade or more on your own, there's a lot of different avenues to fund that company, including bootstrapping it yourself. I think, though, when you take a look at what it takes, at least in my experience, to build a successful company, when you really identify an opportunity, it's about speed. And I think when you look at speed, time to market, you think of New York, you think finance, you think of Texas, you think oil, you think Silicon Valley. It's about speed. And so therefore, that's what I've sort of had embedded into my DNA. And to that end, we looked at more than just the money when it became time to get outside investors. We self-funded the company for a year and a half till we had a working prototype. So we're in a pretty good position in 2007 to raise the $9 million. So it wasn't about raising the money. It was really about selecting the right partner for us, I think, in a few key areas. One that would add credibility to us, because as a startup, one of the toughest things to get is credibility. So if you can partner with those that can assist you in that area, like DFJ and Element Partners, that really accelerates your growth. And I'll give you an example of that. As soon as we closed our round at the very first board meeting, Jennifer and John Rockwell, our other board members, said, go out right now and get a growth line from Silicon Valley Bank. You might need it to extend your runway later.
What's a growth line?
It's a credit vehicle that allows us to draw down additional capital should we need it. And sure enough, based on the reputation of the two investors, in addition to what we were doing, we were able to achieve that line of credit. And we would have arguably never been able to do it that quickly or that easily on our own. I think the second thing that to consider is relationships. So we were new to the clean tech space, and we didn't have a lot of the relationships in this area that Element Partners, who's been investing in clean tech since before it was called clean tech, and Jennifer has, through their sets of experiences across a wide variety of clean tech companies. So we're able to get introduced to people and get invited to speak at events and become thought leaders and things like that because of the value that those types of partners can bring to us. And then I think that the next thing is building a strong board. So I mentioned my second company, I had a dysfunctional board and it killed the company. I think one of the biggest strengths we have at BioFuelBox is an extraordinarily gifted set of board members, such as Tom, Jennifer, and John Rockwell, that really passionately believe in what we're trying to accomplish and give us great advice. And as Jennifer knows, it's not always the message that I want to hear when she's giving me advice, but you know what? When I sit back and absorb it, it's usually exactly what I needed to hear to move the company forward. So there's a ton of value besides the money that venture capitalists. So long story short, we went with venture capital this time around, being extraordinarily selective as to which partner we went with, because they add a lot more value than just money. And I think the other thing is clearly additional capital. So we go out for our next round of funding. Do we have people around the table that are willing to invest in the next round? And if you go with a venture capital firm, normally the answer is yes.